My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey everybody, I'm Bob Johnson, aka Bob Mortgage. Welcome to the Mortgage Report. I do this video update every week so you know what's going on in the market and to help you make decisions as it relates to interest rates so you know what to expect as you're out there shopping for a home. If you're in the market to buy a home and want to explore loan options and interest rates, give me a call at 214-631-5626 or tweet me at Bob N. Johnson. All right, let's jump right into this week's Mortgage Report. Outside of Friday, last week was a strong week for mortgage-backed securities. Friday we started strong with stocks lower and mortgage bonds higher on the heels of the U.S. airstrike against Syria. Then we proceeded to give the entire week's gains back, partially due to the much weaker than expected jobs report. You see, we were expecting about 180,000 jobs, and it only came in at 98,000. Initially, that was good news for mortgage bonds. We went up 28 basis points. The 10-year Treasury ducked below 2.31, which is a very important level. Then some of the news within the jobs report gets digested. Bottom line, the numbers were not as favorable for mortgage bonds as we initially expected. That initial 28 basis point run-up pushed bonds to a resistance level that we have not been able to break through here recently, that 102.8 level in my chart. You can see since January, each time we've hit that level, we've fallen. And we're in an overbought territory right now above that green line, the black circle in my chart, which means selling of bonds would accelerate with unfavorable news. And selling we saw. By 10 a.m. Eastern Time, MBSs were down 44 basis points and the yield shot up to 2.38. All bad news for mortgage rates. This week will be somewhat of a quiet week in economic news, at least until Thursday. Then Friday gives us CPI and retail sales numbers. So what's my position this week on interest rates? I'm going into this week carefully floating, as I anticipate the markets will be a little jumpy as they try to anticipate the direction and next steps of our military. Typically in times of a global uncertainty and conflict, money will flow into safe haven of bonds, and that is good news for mortgage interest rates. So with that said, for the short term, the next 1 to 2 day locks, and the long term, 30+ day locks, I'm maintaining my neutral position as I expect the market should stay close to open, plus or minus about 25 basis points. Bottom line, having been a mortgage advisor for the last 20 years, I'm always looking for ways to maximize your tax strategies, lower the amount of interest you pay, and deliver to you the right home loan product at the right price. If you're in the market to purchase a home, or you're even considering a cash-out refinance, give me a call at the office. I've done this for 20 years and have been blessed to provide financing to over 25,000 families. I'd love to help you with your home financing options. Your dream home may already be within your reach.